Well, hello, traders and investors. My name is Roger Scott. I'm the head trader for Wealth Press, and today is June 19th. Wow. June is almost behind us. My God. Let's talk about the world. Let's talk about the global economy, and then we'll get into the biggest surprise of the week because this is something unexpected. World stocks turned higher on Friday. That's right. They were higher overnight despite concerns that global economic recovery may be derailed by the coronavirus infections. We're seeing a lot of places having reinfections. Global markets have recovered most of this year's losses as investors look ahead to a possible rebound from the deepest economic slump since the 30s. But analysts say gains might be too big and too fast to sustain, and that's what I want to talk about after this. Enthusiasm has been dented by rising case numbers in Brazil, some U.S. states, and other areas. The European Central Bank said Thursday that it's handed an unprecedented amount of stimulus, 1.3 trillion euros in cheap loans to banks. That's huge, as part of its effort to get the 19-nation bloc that uses the euro through the pandemic. Strong reassurances by central bank this week that more stimulus will be available. That's actually a surprise. To counter the worst global turndown since the 1930s appear to have surged. Some of the jitters over signs COVID-19 outbreaks have gained momentum in some places. Markets worldwide gained after unexpected strong jobs and retail data. That's right. In the U.S., fueled hopes that the world's biggest economy can pull out of its recession as government ease up on antivirus measures. Investors' enthusiasm has been dented, however, by concerns of rising infections or reinfections in some cases. Brazil, South America, India right now, Beijing, ouch. And other regions might prompt consumers and businesses to pull back spending even if sweeping lockdowns aren't imposed. The S&P has cut its loss for the year to just 8%. And I'm going to tell you the biggest surprise this week. The biggest surprise this week is that the NASDAQ 100, the top tech and growth stocks, are still showing upside. And we're actually opening Friday at the same level that we were at on Monday or beginning of the week. That's hard to imagine. Let me explain to you why. And I wanted to show this to you, and I want to show you this in light. This is a really big surprise, but this is big. This is big. Let me show you the indices. We still have 84% of stocks in the S&P trading above the 50-day moving average. And again, that may not seem that may not seem like a lot to you. Give me a break. It's Friday. I'm tired. But look at this. We need to see this level turn lower. We peaked out right here. We went all the way. We went to 90. We literally had 20 stocks in the S&P at one point trading below the 50-day moving average, which is unheard of. I mean, you've got negative indexes in there. And so the bottom line is this is very stretched out, and it's still stretched out. Now, remember what I warned you. You may see some of this trading action, kind of where it goes to about the 70th, 80th percentile and hovers around. It can do that, but it usually cools off before coming up. It usually cools off. Sometimes it doesn't. It'll go to the 50th, 58th percentile. But most of the time, anytime you see the momentum levels above 80th percentile, and we went to 95th percentile, they drop back to about 30th percentile. And that would put the market substantially below the 200-day moving average. One thing, though, the NASDAQ has not been part of it. Obviously, it's part of it, but the large caps, the stocks like the Amazons, they've been making higher prices. Look at this. I mean, they just keep going higher. They keep going higher. And that, remember something, stocks like Amazon, Microsoft, Facebook, Nvidia, they have larger market capitalization in the S&P 500 and the NASDAQ 100. So they have more control, they have more say. But when you're looking at it on a momentum level, it balances everything out. And right now, according to our momentum levels, we are headed lower on the 50-day line. And let me show you the worst part of it. We are also coming lower on the 200-day line. Let me go 20 years. You see that? We're curling down. So we had a bounce for the last 2 months a reaction from the 50-day and the 200-day line, but now they're curling back down. So I would be very, very surprised to see the NASDAQ continue moving higher, because a lot of those same stocks that are moving higher in the NASDAQ are in the S&P. And if the momentum levels give out, the large caps are going to give out as well. Let's look at the top momentum levels right now. And you could see here, technology, consumer discretionary, it's still leading on a 6-month, 3-month, and 1-month basis. But once you look at it on a 30-day basis, you've got industrial, real estate, financial, energy, consumer discretionary, material. Technology is in the 7th place, all right? So technology and consumer discretionary are not leading, and that's going to bite into the NASDAQ 100, all right? It's already biting into my CSI scan on a 1-month basis, and give it a few more weeks, it's going to bite into it on a longer term basis. And that is going to have a major impact on the NASDAQ, because there's no way the NASDAQ can get away from it. And again, that rubber band is stretched out. Now, I could be wrong. Here's another scenario. There's only 2 scenarios. One scenario, we start coming off. That's the most likely scenario, and that's what the momentum levels are telling us. But the other scenario is we can just congest for a while. And if we congest for a while, that can relieve that pressure, that rubber band. It can be relieved by just the market staying steady. Whoops, I'm getting too excited. Almost turn over my mic. We can't let that happen. Anyway, I take this way too seriously. But no, seriously, this is really important. I want you guys to be in the loop, and I want you to understand. It's going to be very, very hard to continue seeing momentum levels generate this price level, especially with momentum levels. Now, let me look at momentum levels on the NASDAQ 100. I haven't done that in a while. It'd be kind of interesting to see. We can't see the NASDAQ 100, but we could see the NASDAQ. Let's look at the NASDAQ. Wow, that's crazy. Look at this, 91%. Look at this. That's insane. Let's look on a max time period. Wow, that's the NASDAQ 100. You see that? Folks, it's going to happen. Again, I'm surprised that we've already seen a cool off from 98% to 91% or 92%, but we still haven't seen it materialize in the NASDAQ 100 price. And again, that's because you have a handful of stocks leading it. But once you look at the internals, as we did right here, you will see things are not looking the same. This is a very stretched out market. And the biggest surprise of my week is that that internals on the NASDAQ 100 and the S&P have started moving lower, but price action on the NASDAQ has not. That's going to happen. Remember, there's only so much those 5 or 6 or 8 stocks can do. Ultimately, they will lead, but the overall market will control. Think of it like a dog on a leash. The dog will run, it'll lead, but then the owner will pull the dog back. So the NASDAQ 100, the price action you're seeing is representative of the dog, but the momentum levels, that's representative of the owner, and he's got a short leash. He's got a 2-3 foot leash, and he's a big guy, and he can control that Doberman, okay? And those things are moving lower. So don't let the differentiation between price action and momentum levels confuse you. When you're looking at the technicals, market look like they're surfing and everything's looking peachy, but when you're looking at internals, we're seeing a very stretched out market that's just beginning to cool off. Highest level in 20 years on the NASDAQ 100. These levels will not sustain themselves. Now, I've got something for you. It's Friday. If you need some help trading this market, I urge you to listen to me. I've developed a system that works during and after huge market crashes, like right now, protecting you on the way down and delivering stocks primed for explosive higher rebound mode. All right. We want stocks that are going to explode higher during the rebound phase. Now, considering the market that we're in right now, I honestly don't know if there's ever been a better time for this strategy. It's been turning out winners week after week. This last rotation, this last 2-week rotation, folks, we made over 30%. 30%. The S&P averages over 6% a year. We just made over 30% in 2 weeks using this strategy. Folks, I honestly don't know if there's ever been a better time. This will give you stocks primed to explode higher during the current market cycle. You don't want to miss this out. You really don't. Click the link below or follow the button at the end of this video. Get on the bandwagon. This is the best system. It'll guide you the right way, and it'll show you how you can potentially make massive, massive gains. And you're holding positions only 2 weeks, actually 10 trading sessions. Can you imagine over 30% in less than 10 trading sessions? That's big. You don't want to miss out on this, folks. I'll talk to you soon. And remember the most important part. Have a great weekend and follow the link below. I'll talk to you soon. Bye.